A major outcome of the recently concluded Cop27 summit was the agreement on Loss and Damage Fund. The developed countries agreed to offer funds to the developing countries for the loss and damage caused due to climate change. However, the conference received flack for climate advocates for not doing enough to phase out fossil fuels and scale up climate financing. Climate finance refers to local, national, or transnational financing from public, private, and alternative sources that seek to support mitigation and adaptation actions to address climate change. It includes acknowledging the obligations owed by richer nations to their poorer counterparts. The Kyoto Protocol and the Paris Agreement on global warming called for financial assistance from the parties with more financial resources to those that are more vulnerable. Climate finance acknowledges that significant investments are required for reducing emissions and adapting to the changing climate. Let's take the example of one of the most discussed climate financing examples. In 2009, at the Cop15 of the UNFCCC in Copenhagen, developed countries committed to a collective goal of mobilizing $100 billion per year by 2020 for climate action in developing countries. The goal was formalized at Cop16 in Cancun. At Cop21 in Paris, it was reiterated and extended to 2025. At Cop27, the Loss and Damage Fund was established, but little was discussed about the earlier commitment. Various financial institutions and technologies work in tandem to contribute to climate finance. This is done majorly to adapt to the shift in global energy infrastructure. The contributions are made by banks, financial markets, derivative markets, stock exchanges, investment vehicles, governments, corporates, and individuals. Governments in some countries have also implemented a carbon tax. It must be paid by the companies and individuals for each ton of greenhouse gas emitted by their businesses. The funds are then used for climate financing. At the Cop16 summit in Mexico, the Standing Committee on Finance, or SCF, was established. Its role includes supporting the COP in the mobilization of financial resources for climate financing and supporting the COP in the measurement, reporting, and verification of support provided to developing countries. The committee also organizes an annual forum on climate finance, provides the COP with draft guidance for the operating entities, provides expert input into the conduct of the periodic reviews, overview of climate finance flows, and more.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.